Hey guys, it's Dave, your mortgageguy.com, and I want to go over what rates are doing currently as of March 2022 and then predictions through the rest of the year. But before I do that, make sure you subscribe to my YouTube channel so you can keep up to date with more of these mortgage videos. So I'm filming this as of March 17, 2022. On the 16th, the Fed came out and announced that they were going to raise rates and did raise rates by 0.25%, okay? So the mortgage industry saw a jump in rates yesterday afternoon and in general have seen an uptick going into the year, or it's from the beginning of the year. Originally going into 2022, the Fed forecasted they were going to raise rates by about 75 basis points, okay? So about 0.75 points. Well, that forecast now is 175 basis points, okay? And they have 6 more meetings this year. So if they're going to stick to that, there's going to be a significant bump every single time they meet. And that's something to really keep an eye out for. Now, in their notes, they came out and said it's mainly because they feel extremely confident with the American economy. They feel like they're on the post end of the pandemic financial crisis maybe going on. You know, unemployment's low. A lot of things are looking well. Yes, we're seeing inflation and gas prices, but their stance is that it's a very healthy economy in that regard, and they're going to stick to this plan, okay? So that's something to keep an eye on. They're continually still talking about removing them from themselves from buying mortgage-backed securities. The more they do that, the more I think you'll see rates worsen, because the government's is really the biggest buyer of loans in general, okay? So that's something to keep an eye out for. Now, also when it comes to rates, the Fed announcement does not automatically impact rates every single time. Many times the mortgage industry will kind of predict where they think rates are gonna go slightly before the Fed announcement, so a day or 2 days before. So don't think that just that announcement is making the rates higher or lower immediately. Now, yesterday it did, because that was a pretty healthy commitment by the government to do a rate hike and continue to do it. So mortgage rates did worsen. Now, where are rates going to go through the rest of 2022? Okay. Going into 2022, myself and a lot of experts out there predicted that rates would go into the 4s, right? Low 4s. Well, we're way past that, okay? Now, the other thing is this. Really, I had even done a second video in February predicting where I thought rates were going to go, which was really in the more mid to 4s range, right? Upper 4s. That's been overshot. We're now looking at being in the high 4s and in 5s in a lot of scenarios, right? If you're putting down 3%, if you're doing maybe an FHA loan with, iffy credit. So there's a lot of scenarios you need to prepare yourself. Your interest rate could be in that range, okay? Now, rates are higher than this time last year. So one article I saw, what's the difference in the payment? You know, if you had bought last year versus this year and you were putting down 20%, about $290. I think it was like on a $350,000 home. So interest rates going up is not ideal, but it is what it is. And the rates are still significantly, historically low, right? They're still great rates. And home buying is just something you absolutely have to do versus renting. I've done another video on whether or not you should wait until 2023 to buy a home, and I'll put that out here in the next week or so. So where are rates going to go? Look, the Fed just announcing their commitment to hiking rates consistently, right, and an aggressive hikes to get to that number means that rates are going to be higher throughout the year. There's a chance at this point rates could be, darn near 6 by the end of the year if the Fed sticks to that game plan, okay? And so as a home buyer, you need to be mindful of a couple of things. One is, how much does that rate possibly change your payment? When you get pre-approved for a mortgage and they tell you the rate is, 4.75 today. Ask them to do numbers if it was 5.25. I know that sounds crazy. A lot of people don't want to think like that, but you need to prepare yourself on where the mortgage payment could go. Don't get caught with your pants down thinking you're going to get a payment of this and then the rate is much higher. Same thing for new construction, right? If you're right now doing all your math on a rate of 4.5 and by the time the home is done, it's 5.5, you need to know how that's going to impact your payment, right? And so that's something to really keep an eye out for, okay? So again, to recap, Fed announced that they worsened or increased rates by 1/4, right, of a percent. They're going to consistently really uptick that every Fed meeting to get to their overall goal, which is 175 basis points, right, or 1.75 in rate throughout the year. So rates are going to continue to increase. And as a home buyer, you have to prepare yourself for that. Okay. Now, will rates go down? Most likely not. Are they going to level off? Maybe. But keep in mind, the long period we had at absurdly low rates was really related to a lot of things. Concern over the pandemic, things like that. So the government as a whole wants to get away from those rates. Banks want to get away from those rates. In general, no one's really making money at an interest rate of 3.5, right? So prepare yourself. Rates are going to get higher and get used to that. That's just part of what you're dealing with. Okay? Call or email if you need anything. Comment down below. Subscribe to my YouTube channel. And if you find my videos helpful, I'd love to be your lender. Thanks, guys.